On All About Stocks this week, markets in consolidation mode. We'll tell you if this is an opportunity to add quality stocks to your portfolio. We turn our focus this week on consumption stocks and find out if there's any value there for you in your portfolio. And our investment advisor Sharmila Joshi tells you why you should be buying Havells for the long term. Welcome to All About Stocks. I'm so glad you tuned in. I'm Faye D'Souza. This is a show designed for retail investors. So while you've been in the office the entire week, we've been tracking the markets for you. We have an investment strategy that you can be focusing on, and we've also picked out stocks that you can add to your portfolio. If you have a question about buying stocks, there's an email ID at the bottom of your screen. Feel free to send us any question at all. First, let me bring in my colleague Ajay, who has the latest update on the market action. Ajay.
Well, Faye, Indian markets have been facing a lot of rough weather past couple of days, and this particular week we saw elevated levels of pressure into the market. The benchmarks have lost about 1.5% this week, but the weakness was much more pronounced as far as the broader markets go, and we saw that translate with mid-cap and the small-cap indices losing anywhere between 2.5% to 3%. Combination of reasons really, playing onto the mind of the market. Poor set of third quarter numbers or weaker than expected third quarter numbers. Global worries as well, especially Greece being an area of concern in the Eurozone. Not only that, but we're also witnessing Delhi election overhang also in a way grip certain sections of the market and making it nervous. What if the BJP actually loses out and Aam Aadmi Party actually makes takes the chief ministership post in Delhi? How would market react? How would reform process go ahead? So all these factors combined were playing under the mind of market, and we saw some correction play out. Traders also say elevated valuations of the market as one of the reasons which are tempting a lot of people under the market to book profits. What is interesting is that though market was under pressure, with Bank Nifty actually the main index which was dragging the markets lower, it was the IT index, especially after the Cognizant numbers and improved guidance, which was a ray of hope and held on and in fact made fresh 52-week highs this particular week. Other interest rate sensitives also sold out. What is also interesting or good thing is that the weakness which we are witnessing into the market is not backed by wholesale outflows from the FII side. They've been selling anywhere between 50 crore to 150 crore this particular week, though we have ended almost every day of this particular week with losses. It's a good thing that wholesale selling is not really witnessed, and it's only the traders which are shorting the market or even buying the lower level put options. Going forward, dealers believe that around 10th, mid of next week, we may actually form some amount of base around the 8600 level, depending on how the Delhi elections pan out. But there's still a very high degree of probability of a pre-budget rally starting anywhere around 15th of February going into the budget. And hence traders are recommending their clients to buy high quality stock on extremely panic-like days and sharp dips in order to play the market well.
All right, Ajay, thank you for that update. Joining us in the studio today is Sharmila Joshi. Sharmila has been advising us on stocks now for nearly 4 years, Sharmila. Okay, so I want to start by asking you this. It hasn't been a great corporate numbers earnings season, hasn't it? It's sort of been subdued. There have been a lot of excuses being made in terms of, banks are talking about asset quality and the fact that it will improve, but sort of speculating about consumption stocks and the fact that the numbers are not great. What is, in general right now, what is your view on what you've seen so far from earnings?
I think it's been pretty disastrous, really, if you ask me. I mean, the last couple of days, towards the end of the week, you'd be hard pressed to find a number sort of that you liked within that, within the whole really array of numbers that we were hit with. So, yes, I think it's pretty disappointing. I think IT has sort of delivered in spite of, cross-currency winds, etc. So that's been heartening. And, they had sort of voiced caution ahead, but in spite of that, I think, they've done sort of in line. But, the major disappointment has really come from the auto companies, from a whole host of companies really across the board. I mean, some you knew were likely to be bad, like infra, banks. You knew that there would be NPAs there. But, yes, I think, you were expecting slightly better number from some of this consumption play, hoping that there was a pickup in consumption, given, the kind of buoyancy that we've otherwise seen in the market.
Actually, let's break that up and talk about first banks. Everyone from, see, the largest like ICICI Bank down to the smallest UTI, Indian Overseas Bank, just asset quality has been a concern across the board. What does this mean for the banking sector? I mean, we saw one rate cut that hasn't really been passed on to, end users at this point. What does this mean? What is your forecast really for the next couple of quarters in the banking sector?
I think it's a little worrying, given the kind of NPAs that we've seen, because yes, I think the rate cut was sort of symbolic and perhaps done with a view because, there has been, some kind of discussion that there is room for bankers to pass on, but they aren't. But I think the results are a clear indication, where their hands are tied and why they are not in a position to really pass on any major benefit. Because I think that a lot of new NPAs seem to have come up in the books, and I think what is also concerning going ahead is that a lot of loans that they had restructured earlier, you can't restructure them a second time. So if the situation doesn't improve, what happens with those? So I think that it's really the government's turn to act now, I feel, because in a sense the RBI has done its bit, the banks have sort of shown where they are with their numbers, and I think as you said, perhaps the sort of really little concerning thing is that even private banks are increasingly beginning to show this pressure, because up until this point in time they were sort of managing their books fairly well. So yes, I think that's a space that we really need to keep our eyes on and to see how things go for them from here.
Quick question then about consumption stocks. Numbers have not been great. ITC numbers were not great. Auto sales numbers, like you said yourself, were not great. Pizza numbers might have been slightly better, but I don't know how much we want to read into that. I want to understand from you what your reading is on consumption stocks altogether right now.
So I think that again space, it clearly shows that, that there was a belief that some of this play would actually start showing recovery before, the economy sort of, so whether before you saw the recovery in an infra or in capital goods, you would see the recovery in, these direct sort of consumption plays, but that hasn't come. And in fact, a lot of managements have sort of guided that things may not be that good because they haven't seen that investment pick up. I think the bright spots, and surprisingly bright spots, have been a Titan, which sort of held its own, which was in itself very surprising. Jubilant Foods, as you mentioned, I think that, that sort of coming in line after so many quarters was also good. Godrej Consumer got a huge thumbs up, I think, with the kind of numbers that they've given. And again, the management commentary that actually rural pickup has been more, which sort of contradicts what everybody else's experience has been, because they've actually seen a drop in rural spending because of this cut in MNREGA and all those things. So I think it's been a mixed bag that way, but I think pretty much you can safely say that we aren't really seeing any really recovery in or any pickup in consumptions as of now.
While we're on the subject, very quickly, what would your advice be to anybody who has ITC in their portfolio right now, long term?
Long term, I think it's a great stock, because I think if you heard from the management, they are shifting their focus to a lot of food products, and they're increasingly getting into that basket, whether it's biscuits, whether it's a whole host. And that kind of strategy will take 4-5 years to play out. But I think it shows the vision of the management in thinking that cigarettes is not going to be the best business to be sort of focused on or concentrated on, maybe 4-5 years down the line. And therefore you need another plan sort of, which is sort of taking shape even as maybe cigarettes remains a part of your portfolio, but not the only piece that you have going for you. And clearly, I think if you look at the way the kind of results that we've had from a Nestle or a Britannia, I think it is a clear indication that those are the businesses that are doing well, and therefore I think ITC's decision to focus on that is very good.
All right, so hold ITC for the long term, and in fact we've asked Sharmila to pick out one stock for us at these levels. She's picked out Havells. Havells ended the week at 244. If you look at that stock over the last, say, 6 months or so, this is exactly what we were talking about. Bad numbers, a sort of ominous guidance from the management. It's fallen a lot. It's in that consumption pack that just hasn't seen the numbers sort of back it up. So why Havells? Why right now?
I think the first reason is what you said. We've seen it really fall off. And what I think is that, these are really more external sort of issues. There is nothing wrong with the company or with the product or anything of the sort or the kind of markets that they're in. It's more a function of the fact that you haven't seen that recovery come in so far. Again, they have a considerable exposure in Europe, which I think will actually play out to their advantage going ahead. Because the kind of action that you've seen from ECB will mean that there is a sort of an improved spend across Europe. So I think that should augur well for them. As well as I think the domestic pickup should come in the next couple of quarters. And the stock, as you said, has fallen off substantially, So I think that you will see recovery in this stock. And it at 244, I think it's a good level to sort of enter the stock and keep it with a year's sort of a time frame.
So basically what we're doing right now is playing on the entire consumption theme, and how long do you think it's going to be, given what we've seen on those numbers, for the consumption theme to recover and this one to pick up as well?
I would assume that stocks like a Havells or in the infra space, something which is in road development, those should actually show recovery before the rest of the consumption play. Again, I think if you were to look at the kind of market that Havells is in, and to see sort of related play, another stock which I've recommended, Century Ply, they had a great set of numbers. So it's been a little bit of a mixed bag. Another stock which I used to hold earlier in my portfolio, Kajaria Ceramics, that also seems to be doing reasonably well. These are again sort of related to home improvement, or lighting and those kind of products. So it's been a mixed bag. So I think from that point of view, this part of the consumption basket will do better ahead of the rest of the consumption play.
All right, so that's the recommendation for this week. It's Havells. Do you want to give us a target?
I think closer to 320 should be a price that you should look at.
Well, Selva has written and he wants to know if he should buy Axis Bank at the current levels. Axis Bank ended the week at 563, but midweek it hit an all-time high. Should he be buying at these levels?
See, what has happened is that because ICICI numbers were a little disappointing, that's actually worked out in favor of an Axis Bank, because you had an Axis Bank which was sort of underperforming the rest of the private banking space, given the fact that their NPA levels or the kind of NPA book that they have, because they have a lot of exposure to power, etc. It sometimes bites them. But, I think when you saw the kind of numbers that an ICICI bank gave, then, there was sort of a rationalization that maybe actually Axis Bank looks cheaper in terms of valuation, which is why you saw a lot of buying shift to Axis Bank. So I think it's a good bank. I think you can wait for it to correct a little, because it does tend to be a little high beta even among the private banking space. So that's the only, sort of negative for Axis Bank. But overall, I think that if you had to buy something within the banking space, it would be a private bank. And within the private bank, I think Axis Bank is a good name.
All right, so Axis Bank is a good name, and you can go ahead at these levels. Mercy David Vijay has written in, what's your view on Gujarat Pipavav Port? It ended the week at 204 rupees. Well, in terms of that, we were just talking about that entire infrastructure play and things like that. Of this particular stock, would you recommend go ahead right now at these levels?
Yeah, results seem to be fairly decent. So I think, that's a plus point for Gujarat Pipavav. And I think, yes, as we were discussing, I think if you were to see that pickup in economy, it should be stocks like Gujarat Pipavav, which should, sort of incrementally start doing better. So yes, I think it's a fairly good play within name within that sort of play.
Welcome back. You're watching All About Stocks in ET now. Thank you for staying with us. Sharmila Joshi is still with us, and we're going to try and answer as many questions as we can during the course of this show, because we received so many from you. Well, Prabhakaran has written in, he has 50 shares of Wockhardt, which he bought at 801 rupees. He wants to know, should he hold on to that stock? Now, the stock has rallied a fair amount after its latest numbers came out. It ended the week at 1235. Hold on to Wockhardt?
I think so, because, I think even within that mid-cap pharma sort of space, we've seen a mixed bag of numbers. For instance, I think Aurobindo numbers were a little disappointing in the kind of margins they delivered. But I think Wockhardt also, there was a little bit of a disappointment, but that is sort of, I think you can look beyond that, because they do have a couple of facilities which are ready for FDA inspection, etc. And I think going ahead, these things could sort of play out for them. So if you have a reasonably sort of a long-term horizon in mind, then definitely I think you can hold on to Wockhardt.
All right, hold on to Wockhardt. We have a question from Pradeep, who's written in 2,000 shares of Castrol India at an average price of 515 rupees. Should he hold on to that stock? The stock ended the week at 481. What's your call on Castrol?
I think it's a good play, and it's sort of in a niche play. You don't have too many stocks which are in this lubricant kind of an industry, and the results again were fairly steady. So if you want to have like a stock which may not like really have a runaway sort of a rally, but which sort of steadily grows, then I think Castrol is a good name to be invested in.
But another very interesting stock, Venkata has written in, he has 100 shares of Engineers India, which he bought at 230 rupees. Should he hold on to that stock? The numbers were not great at all, in fact, from this company. The stock ended the week at 212. This was something a lot of people were very positive on about 6 odd months ago.
Yeah.
What should he do now?
See, I think within the PSU space is a very interesting stock. You know, the kind of business that they do, they're pretty much unique in that. And there isn't really anything else that is sort of in that space. But yes, the stock has corrected a bit. So I think that makes it all the more reason why you shouldn't sell at the current price. But just sort of play it by the ear a little bit and see how things go. But because I think that this would be the wrong price to sort of exit the stock. And I don't really see, I don't really perceive it to be a bad company, so to speak. So I think the recovery will come.
All right. Another very interesting consumption stock. Girish has written in about 5,000 shares of Tata Global Beverages, which he bought an average of 130 rupees. He wants to know if he should hold on to that stock. The stock ended the week at 152. Again, the numbers were not great, but it's such an interesting company. Would you recommend he holds on to it?
See, actually, when you're understanding the numbers, you must understand that the profit dropping by 30% was really because last, the year-on-year profit quarter, they had a sort of a tax write back. So which is why, that last year's profit looked a little inflated. So if you remove that, then it doesn't really suggest that there is a 30% fall in profit. But that said, the top line was sort of flattish, I think 2% lower or whatever. So obviously it's not been a very good quarter for Tata Global. But, as you said, the business is so interesting. I think the way Starbucks is playing out for them, as well as the rest of their basket. So yes, there could be a bit of a slowdown, because of the way things are. But I would think that you can hold on to this stock, giving yourself a target of about 180, which is when I think you should revisit the stock and then take a call on whether you want to stay invested.
All right, stay invested in Tata Global Beverages. Ajit Thakur has written in, he has 400 shares of TVS Motors, which he bought at 250 rupees. He wants to know if he should hold on to that stock. Now, we saw, better numbers there from TVS Motors than the rest of the auto sector, at least. And the stock really soared in reaction. We were talking about it last week as well with Gaurang, who said there's plenty of steam left in that stock. Do you agree?
I think the disappointment in the numbers was that you didn't see an expansion in margins, because this is something that market was looking for. So, while the profits were up, you saw margins still pretty much at that 6% level, which to me was a little disappointing, because, it was expected that in this quarter you would see an improvement on that. Again, that said, I think TVS Motors is one sort of play within the two-wheelers, which is still reporting good numbers. The monthly sales numbers still continue to be strong, and they have a fairly good lineup of scooters and motorcycles, which should sort of continue to give them a good run rate. So from that perspective, I think stay invested. I think the stock, when markets improve, should possibly head back again to that 300 kind of level.
All right, last question on this segment. Sarah Kampado Ranga has written in, he would like your view on first source solutions for the next 1 year. Well, ideally, we give recommendations on this show for 3 to 4 years, but just because he's asked so specifically, what's your call?
I think you need to wait and see the numbers, but from whatever indications there are from the company in this last year, they seem to be doing better. So I would say yes, hold on.
Welcome back. You're watching All About Stocks and ET now. I'm Faye D'Souza. Sharmila Joshi is still with us, and we're trying to answer as many questions as we can. It's time for us to look at the viewer portfolio of the week. Now, remember, every week we pick one portfolio. We take a look at your entire portfolio and tell you what stocks you should be holding on to and which ones you should be selling. This week, Vishnu is our lucky viewer, and he sent us a list of stocks. This is a very interesting portfolio, Sharmila. It's a list of stocks that we don't normally see, or people don't normally write to us about, which is why we've picked it out. 30 shares of Care Rating, which he bought at 13.39. That stock has run up a fair amount, so he's got his money's worth. What would you recommend he does? Hold on to it?
Absolutely. I think, this stock, I think, is a good stock, and I think if markets improve, and we are seeing signs of overall improvement in at least the market scenario, more issues coming, etc. That should, I think, only mean increased business for a company like Care Rating. So I think it makes sense to hold on to the stock.
All right, he also has 745 shares of KC International, which he bought at 60 rupees. That stock ended the week at 84. What would you recommend he does?
Disappointing numbers there. So I really leave it up to the investor, because I think if he wants to stay invested in KEC International, then he'll have to give it another year or two to really come out of the kind of level that they are at, given how the entire sector has been and how numbers for the company also have been. So you'll have to wait to see that recovery in order book, etc. As I said, I leave it up to him, because he is making a little bit of money. So if he chooses to exit, I think that's fine.
If he does choose to exit, where would you like him to move that money to?
I would say that if he was looking within the corresponding space, then I think the kind of numbers that we've had from Thermax make it a great stock for me to be in.
All right, 125 shares of IRB Infra, which he bought at 195 rupees. So he's not losing money there at all. The stock ended the week at 260. But given the fact that Infra has not recovered like it was expected to recover, what would you recommend he does?
Again, I think IRB, within that road infra space, has a great model. There are concerns on IRB. One is, the kind of corporate issues that keep coming up with the management, and you keep hearing of CBI inquiries, etc. So you have to be ready for those shocks when the stock can, suddenly fall off and fall 5, 6, correct 7, 8% in a day. That said, I think if you really see a recovery in infra, then I think road infra will be the space which the government will focus on first, and they've said it repeatedly. If that gets translated into action, then I think IRB Infra stands to gain substantially. So from that point of view, I'd stay invested, because I think his buying price is reasonable.
All right, he also has 75 shares of Finolex Cables, which he bought at 209 rupees. Hold on there.
Yes, I think once again their numbers were fairly okay, and I think within the mid-cap basket, this is a fairly decent stock.
Well, here's the only stock he's losing any money on. He has 135 shares of Gati, which he bought at 268 rupees. The stock's at 240. Hold on as well.
The stock has corrected a lot, actually, and I think this became a very fancied sector, because it was your answer to sort of the e-commerce play, and that is one space in the market that's getting all the funding. So it's a very exciting space to be in. So there again, I think, if he has a year or two sort of an investment horizon in mind, then I think he should stay put. If the stock falls substantially from these levels, then he should think of averaging or whatever. But I think the kind of numbers that we've seen from Gati, as well as the kind of business that they are in, make me quite hopeful for the stock. So I would really stay invested.
All right, stay invested. And before we wrap up the show, would you give us your disclaimer about the stocks we talked about?
Yeah, I think we've discussed quite a few stocks, and I may have a position in some of the stocks discussed.
All right, so that was Sharmila's disclaimer. Thank you so much for spending time with us this week and answering all of our questions. If you have a question for Sharmila, write to us. Email ID is at the bottom of your screen. You'll find a copy of this show on our Facebook page as well, and you can reach me on Twitter. Thanks so much for watching.